Hello, fellow traders. 'Tis I, the Rumpled One. It is December the 22nd. It's Friday, the year 2017. Second video. Merry Christmas to you and yours. And this is how to use squiggly line indicators. Now, those of you who know me know I like to poke fun at those who believe in the squiggly line indicators. But I used to use them, and so I thought, in the spirit of helping out fellow traders, I will show you how to use squiggly line indicators. And I guess maybe a squiggly line indicator might get harmed in the making of this video. So let's just look here at RSI. That was one of the squigglies I used to use. Now, what RSI does is it goes between 0 and 100, and some people say anything over 70 is over bought, and anything under 30 is oversold. So you can see right here, you're getting in the oversold territory. And you know, if you would say, hey, it's oversold, I'll sell. Well, you can see you would have taken quite a lot of heat, especially here on the weekly chart. Okay? So it's just, I mean, you could have been really hurt there. Now, that being said, you can see here finally it started to come down. And that's where you would have made your money. So how can we use this squiggly line indicator to make money? Especially if you got the signal here. So what you want to do is the following. Let's see, isn't there a what? Yeah. Okay, so right here. Well, that's interesting. It's saying RSI is 74. Okay. But that looks like it's higher than the line. So right here, when you see it cross and close above, this is when you're starting to think about shorting. Well, when would you want to short? Well, because you really wanted to get short anywhere here. So what can we do to make this indicator help us? So basically, it's alerted us, hey, it's time to go short. Well, most people say, well, you wait for the crossover right here. Well, that could have paid off, as you see. Because you had an open here, and then it paid off. Wow. Not bad for a squiggly, but let's take another look. Look deeper. Now, if you see, there's some magenta and blue lines here. And those of you who watch my videos can probably figure out what they are, but I'll just go ahead and tell you. I wrote an indicator just for this purpose to show when there's a turn trade. Now, those of you who haven't watched, I'll explain. A turn trade is when you have a red candle followed by a green candle, okay, or a green candle followed by a red candle. Basically, price is turning. It's either going up, or turning down. So how does that help us? Well, when you're in this overbought condition, you want to look for a turn trade. Okay, so in this case right here, this signal, price is turning down. So there was an opportunity. If you were to go short here, let's see, we've got a low of 1730 and an entry of 1764. If you look over on the right hand side here, it's about 1764. So there were some pips to be made. Of course, price reversed on you. And now once again, right here, you've got a trade. But as you can see, you probably would not have triggered that trade, okay? Because actually this is a weekly, so it gapped up, you take short, and when it starts retracing, you exit. So now here's another turn trade. So when price closed, it went up, but you can see here on the way down, you would have made money. So you would have been in a trade here versus getting in a trade here. So you would have saved yourself, about 20 pips or so. So right here, okay, if you would have jumped in right at the open, you would have taken some heat if you really wanted to jump in at the open, or if you played the price action. But we're looking at the weekly, and I don't know if anybody would want to trade the weekly using the RSI, but you could. But once again, if you see these turn trades, that's the clue. That's how you use it. Now let's drill down to the daily. Let's see, do we have any signals here? We don't have any signals there. Let's look at, see if dollar Canadian gave one. I think it probably did. Yeah, here we go. Right here, once again, you can see here you were overbought. Then you see here you had a turn trade, it moved up and then came down. So this is basically the get ready. So when it crosses, think of that as get ready, and then when you get a turn, think of that as get set, and then when that candle closes, you see, and this is your go right here, that break. So that is how to use the squiggly. Basically, it says, hey, get ready. Then you have to go in and start to look at some real price action. Let's see, is there anybody that popped up? Well, actually, we can look at the dashboard here on the daily. I don't see anything. Let's drop down to the 1 hour. Nothing really looks good there. Except, let's explain something here. Another thing about the turn trade. Okay, right here, we had an oversold condition. So, you'd want to look to buy. When would you buy? Well, you see, you're getting a turn trade, and when that candle breaks the high of that red candle, that is your turn right there. So if it's breaking that high, you don't have to wait. Just like here, if it's breaking the low, like right here, it's turning, you don't have to wait. You can go in, because you see, if you wait, you miss out on some pips. So it's when the candle doesn't break the high of the previous candle when you're turning up, or break the low of the previous candle when you're turning down. So in this example right here, you've got a green going up, red going down, but it didn't break the low, so you wait. And then here, right here, you can see it went up and then it came back down and broke it, and then that's where you can get short. And you can see here that you might have taken a little heat, but then it continued, and then the rest is history. Once again, you'd have a break here. And say you got in a trade right here. Well, you see how it broke that high on a turn trade? Right there, boom, there's your exit. So from here to here, that's your profit. Not too shabby. That's just using a turn trade. We weren't looking at the RSI. So for the beginners or people who like to use squigglies, think of this as a get ready right here. It's like, hey, once again, you can see it here. We are oversold. No, I'm not going to fall. I'm not going to be a sucker. Not going to be a sucker. Not going to be a sucker. I'm not going to be a sucker. Oh, now we've got a turn. I'm going to take that turn. And as you can see here, you were actually buying low. It was oversold. You're buying low. Now you can sell high. And that's how you do it. Now, as far as RSI, you know, the standard is 14. But back in my days of using RSI, I like to use, oh, that's the wrong indicator. The dashboard here. For those of you who haven't seen it, this is a dashboard indicator that I wrote, part of the 2017 package. And you can see here you've got all kind of cool things you can do. So we're going to change this to a 2. And if you're wondering why are these different colors, well, you can see here when you're using these indicators, where is it? Use levels. If you set that to true, then it's going to use, you have 5 levels to use, and then you've got the 6 colors to tell you when you know which level you're in. So we're going to switch that over to 2, and as you can see, when you do 2, you get a lot more action. And you can see here, right here on this crossover, look when it told you to do it. Oh, the same as the price turn. That's what you're looking for right there. And so you see here, once again, you saw it, it's coming back. You got the turn, you got your trigger. You're making money. You're making pips. You're banking them. Let's see, what do we have here? Oh, we've got the dollar yen. Yeah, see, if you click, these are buttons. So we've got the dollar yen right now in that condition. So once again here, you see, you've got an overbought, and then you've got the trigger right there. Or if you're just following RSI 2, since it's much more responsive, you can take it. Now, one other thing about these indicators, the positive negative divergence. You can see here, price is making a higher high, but it's making a lower low down here from here to here. That's called, that would be a negative divergence. Higher price, lower indicator, negative divergence. That means price should come down. And it did. Okay. So, and it took me about 6 months to understand divergence, just because the guy who was explaining it never could finish a thought, let alone a sentence. But I knew there was something there, and I just stuck with it till I finally dug it out of him to figure it out. But you see, you got to be real careful, because see here, you've got an 88.69, and here you've got an 85. So that looks like divergence. But just be careful. See there, it went up a little bit higher, and then it came down. So that's just one of the things you have to be aware of. So I guess I didn't really harm the squiggly line indicator too bad in the making of this video. But like I said, I just thought, you know, in the Christmas spirit, I should do something to help people who like to trade squigglies. Hopefully I can either keep them out of trouble or help them make some pips. In either case, everybody, traders, you guys have a happy holiday. And remember, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off. And by the way, no, I'm not going back to squigglies.